Hey, welcome to another live broadcast of Master Investors Company. Today's topic, we're going to be speaking about how to determine if something is an asset. When we learn how to do that and we understand the 8 new rules of money, we can definitely become wealthier faster and very much with accuracy and is calculated. You can get to the next level financially very quickly. But first, we need to start understanding about the new rules of money, which I have a presentation for you today. And what I want to do is go over our latest blog that we did. So if you're on your computer, you can go to MASTERINVESTOR.education. Also, as you can see, you'll have this popping up in front of you. You can get the book, How to Build Cash Flow with the Internet, download it right to your phone or your computer and keep it for life. It's over 500 pages long. It's going to give you the exact formula in how to build cash flow, aka passive income from home. Very important to start working on building your asset column. And this book right here, we just released last month, is extraordinary. We actually applied into our business. They have tremendous amount of financial education with the step-by-step formula that is going to help you get your business from home, started making money right away from home using the steps that we have put into this PDF. However, let's go to our blog so that you can see the content that we have for you today. So how to determine if something is an asset, right? One of the major differences between the poor and the rich is that we understand how to tell if something is a liability or an asset. And when we can do that, we can actually make better decisions when it comes to investing and acquiring assets that are actually producing cash flow into our income column. Remember, we all have a financial statement. And so we have an income column, we have an expense column, we have an asset and liability column. It doesn't matter which side of the cash flow quadrant you're on, whether you're on the left side of the cash flow quadrant or you're on the right side. What's important is that you understand that you have a financial statement, and learning how to read the financial statement and adjust it and improve it is going to determine whether you're going to reach financial freedom or get more wealthy. If you're already at a point where you don't have to work for money and your investments or businesses are paying for your total expenses every single month, then by all means, you can actually improve your bottom line, aka cash flow, because the game of financial freedom, building wealth, it boils down to the asset column. Do we have enough investments working for us that are making and producing cash flow, aka passive income, which is the type of income that is taxed at the lowest bracket. And so once we start using the 8 rules of money, then you will understand how to multiply your passive income and use leverage as a form of velocity so that you can get more wealth into your income column and asset column, right? So a lot of people that have a job, they don't have any assets on their asset column. Even if they have or own a home, if they live in it and they have to leave every morning or every day to go to work at a job and they're paying for that house out of that income, then that house is a liability to their financial statement. However, is the bank's asset on their financial statement. That's why it's important to not only learn how to read your own financial statement, but also the investment or business that you're looking into obtaining. So if you're going to obtain a house, is it going to be an asset to your financial statement? And if it's not, then it's usually somebody else's asset, okay? And so we're going to explain that in more detail, but you can also turn a liability into an asset. So yes, there are ways that even though it's the bank's asset on their asset column, you can also turn that liability into an asset for you as well if you apply the strategies that we have provided in our ebook, because it's going to show you financial education made simple that can help you elevate the financial well-being of all readers. So if you apply the formula not only online, but if you have a home or if you're willing to get into real estate, then you can also take a look at the book that we have talked about. Is on our website, or you can go to www.masterinvestor.money and you can download a copy, or you can simply go right here to all courses on our main website and go right here to how to build cash flow with the internet. Buy a digital copy of our new book, A Total Guide to Learning How to Build Cash Flow from the Internet, filled with financial education made simple. Learn the new rules of money and invest with them to get wealthy fast. The book has over 500 pages. It's literally a total guide to investing like an inside investor, because ultimately that's what we are encouraging to be, an inside investor, someone that knows how to acquire and build assets for their asset column. And in order to know how to do that, we need financial education. So we have poured financial literacy into that book so that you can come out at the end of it with a higher financial IQ and with a total guide on how to start building your cash flow with the internet. Okay, so you can you can buy it right from our website, which I highly recommend, because you will enter into our inner circle where we're going to be providing more additional and high quality financial education right to your phone. And you're going to be part of our events that we will have around the year, and whether they're online or offline, we will invite you, and we will appreciate the time and effort that you're making to improve your financial education. And we're going to have opportunities for everyone to be able to improve their asset column. Okay, so let's go back to the blog. So if you want to find our blog, you can go right there into the blog tab. Let's go to this one right here that we're talking about. So determining whether something is an asset, how do we do that, right? And so more financial education will help us do that. And also with the presentation that I have at the end of this blog right here, after we get through it, we're going to go over our presentation about the 8 new rules of money. Okay, it's going to help you tremendously in learning how to determine whether something is an asset or liability. Okay, so look at this graph right here. Changes in share of income versus 1979 after taxes and inflation. So a year that I want you to remember all the way to the end of this live broadcast, and thank you for your time. Make sure you hit the subscribe button if you're right here watching me right now, or you're watching a replay of this valuable content. By the end of this video, you're going to learn the 8 new rules of money and how to start making money from home using your laptop or cell phone and providing value to the marketplace. Okay, so this graph right here can show you the gap that is growing tremendously between the ultra wealthy and the poor. The middle class is also disappearing because it's actually those people that are high paying employees that do not have the time to invest in financial education. So they're going to end up, going towards the poor side. And so as you can see, in 2008, when the crash happened, look at the rich growing spontaneously very high away from the middle and the poor class. And the poor class is dropping, and as much the middle class is dropping because of the lack of financial education, and also the new rules of money has made an effect on the economy since 1971. That's when the year of the dollar and the gold got separated. And so from that point on, money became just a currency. It's not money. It's not backed up by gold. It's backed up by an idea with confidence. So as you can see, this chart shows over the last nearly 4 decades, the rich have gotten massively richer while the poor and the middle class have gotten much poorer. And the answer is really fake assets. And that's why this title is How to Determine if Something is an Asset. A fake asset doesn't put money in your pocket. It appears that it's an asset. So when the bank sells you a home and you have a mortgage of 30 years and you're paying for that mortgage out of your hard-earned income, then that is not an asset. It's taking money out of your pocket. It's not putting money in your pocket. In your imagination, you're looking at the economy or the market and you're saying, well, I bought the house when it was X, Y, and Z. Now it has more value. The market is going up. So now I can appraise my house and have, a raise on the value of the house for over $300,000, for example. And so that imagination can make someone think that they have an asset when their house is not their biggest asset, it's the biggest liability, okay? However, if they turn that into an asset by, whether they have a 3-bedroom home or a 5-bedroom home or whatever it is, and they can somehow turn it into a rental and have the renters and the tenants of the house pay for that mortgage and cover for all the expenses at the end of the month, including taxes at the end of the year. And in addition to that, puts money into the landlord or the owner, in this case will be you, money into your pocket, then that will be an asset. If the mortgage is getting paid by itself with other people's money, right, with the tenant's money, and also is putting money into your pocket. So what are fake assets? The conventional financial advice given by people is go to a good school, get a job, save money, buy a house, and invest in a balanced portfolio of stocks, bonds, and mutual funds. It is likely we're all been here and have given this advice as well from our teachers, from our family members, and they just didn't have the financial education to understand the new rules of money. And when they change, they didn't let us know, hey, don't treat money like money anymore because it's debt. It's an idea backed up by confidence. And today is literally that, because more so with today's technology, now you get a credit card, you get, it's digital money now. It's currency. It's nothing behind it except the idea and the confidence of the banks. So Nixon took the dollar off the gold standard in 1971. After that, our money was toxic. It became debt. And so how the money is created today is created with debt. That's why we love to use debt. The rich loves to invest with debt because it's tax-free. Automatically we can deduct taxes and we don't have to pay any taxes on debt because the law says we cannot pay taxes on debt. After realizing what the government was up to, we came up with the lesson number 1, which is the rich do not work for money. We work hard to acquire assets for passive income, okay, which is the income that is taxed at the lowest bracket and allows us to actually be tax-free legally. But we have to have a great team of professionals around us that can use the tax code and the corporate law to deduct all taxes legally and have us live and accumulate wealth tax-free, okay? That's why financial education is highly important to have, and it's more essential than professional education, actually, because, we're going to be playing the game of money to the very last breath that we take. So if we can get smarter financially, then we can actually achieve more dreams, and everything that we ever, thought of, we can actually obtain it without having to break our back and waste many years of working for maybe a car that you like, right? It's better to have a business that pays for that car, because we're not going to actually enjoy the car. We have to work very hard to pay for that car. Maybe we'll enjoy it a little bit, but it's not really the right way to do it. if you want to truly have a total freedom life, okay? So understand that 1971, money becomes debt, okay? And the lesson number one, that the ultra wealthy, we do not spend our lives working for money. We spend our lives working to obtain assets that produce passive income, cash flow. When you work for money at a job, that is called earned income, aka ordinary income. Majority of people, about 90% of the population, that's the only type of income that they have in their financial statement. So once we realize that, then we can start working on our asset column, because even if you're poor or middle class, you still have a financial statement, you have expenses, you have liabilities, and usually they are not assets, even though they may think that their home and their car is an asset. But if it's not putting money in your pocket without you having to work, and it's and the debt of that asset, of that vehicle, right, or that house is getting paid with other people's money, then it's not an asset. If it's getting paid with other people's money, then it's an asset. If it's not, if you're paying with it out of your own pocket, then of course it's not an asset, okay? It's not putting money into your pocket, it's taking money out of your pocket. So the debt is bad debt because it's withdrawing money out of your income column, right, in a form of an expense. Is a mortgage expense. You have to pay, and you have to pay the taxes, and also to keep the property, well kept, the grass cutting and all of that. All of those expenses are taking money out of your pocket. They're not putting anything, and you're paying it with your hard earned income that you go every day to work for. So that will be considered bad debt, but you can turn it around with financial education if you turn it into an Airbnb, or you turn it into a rental for the whole year, and now that tenant can cover the entire mortgage and the entire expenses of the house to maintain it, and also puts money into your pocket, whether it's $25 or $2,500 that you're getting in addition after everything is paid. That is positive cash flow. And that's where we are looking to do with our liabilities, is to figure out whether that liability can really be turned into an asset. And if not, then find an asset that will pay for that liability. For example, if you have a car that you love and you want to keep, then you got to hurry up and build an asset, if you don't have one, to pay for that car so you can enjoy it more, and you can go on about your life and your passions and your purpose in life, right? So realize that money is toxic. That's another point to make, because money is debt, so it's toxic. There's no go back in it. So it's just a currency designed to steal the wealth of anyone who worked for money, save money, or invest money in government-sponsored investments such as 401ks, IRAs, stocks, mutual funds, and ETFs. Our house is not an asset unless the mortgage gets paid on its own and the house makes us cash flow from the tenants. Savers are losers. The rich do not work for money. Understand that, because after 1971, the rules of money change. From that point on, if you're saving money, cash under your mattress, you're saving garbage. And if you put it into the bank, is also being lended out to an investor like myself that knows how to control that and can multiply that for the bank using an asset, hard asset or an intangible asset, whether it's a business or an investment, but it's making cash flow. So in order to keep our new money, right, the currency with value, we need to move it from asset to asset. So what counts is to have assets. That's really what boils down to, okay? So the so-called financial experts do not have the financial education, and that's why they sell you these types of investment vehicles that are fake assets, because you're putting money into it, but you're not getting any money back. If it's not putting money into your pocket, then it's not an asset. Unfortunately, a lot of people believe this salespeople, and they go into this investment vehicles. They have no financial education, so they rather give their money away and wait for the market and pray that it's going to go up so they can somehow one day sell their stock for a higher price. But that is trading. That is not investing, and it has a lot of risk. Remember, smart investing and the highest level investing is very calculated, okay? And we have control over the entire investment, okay? And that's what we want to do here at Master Investors financial department is that, you understand how to invest your own money and how to use other people's money to invest the bank's money to get richer with fake money and use the debt that you're obtaining, whether it's a credit card or a loan, to acquire assets into your asset column that produce passive income for any type of economy. Whether the economy is up or down, you still are able to control those assets. And even after the money is paid back to the bank, you still have control over those assets. So you get to a point where you have infinite return on investment, okay? So an asset puts money in our pocket, very simple. A liability takes money out of our pocket. The simple definition of a fake asset is one that promises to make us richer, but it actually robs us blind. And the types of fake assets are 401k, like I mentioned. An individual retirement account is a fake asset because it takes money out of your pocket for years. A government pension is a fake asset because it is taking money out of your pocket also for years. A house that is primary residence is a fake asset because it is taking money out of a person's pocket in the form of a mortgage for 30 or more years. The person who lives in the house also have to pay all the repairs and taxes out of pocket. A mutual fund is a fake asset, so are stocks, bonds, ETFs, and savings. If these are not producing any dividends or any cash flows today to you, passive income, then it is a fake asset, and it's actually liability, okay? Because it's just withdrawing money out of your expense column, and that money is coming from your income column, which if you tell me you have a job, then you're working for liabilities. They are all, derivatives of fake assets. Mutual funds are loaded with fees that make the rich richer and the ones that use it poorer. Insiders know mutual funds investors put up 100% of the money, take 100% of the risk, gain less than 20% of the profits. Remember, asset puts money in our pocket, liabilities take money from our pocket. By following the simple formula, we can always tell the difference between a fake and a real asset. What's the problem with fake assets? As we mentioned at the beginning of this post, the ultra-rich have gotten massively richer while the poor and the middle class have suffered over the last nearly 4 decades. The way in which the rich are getting so incredibly ultra-rich is by using fake assets to steal the wealth of the poor and the middle class. So we need to take advantage, and how do we do that? By understanding this new rules of money, understanding the business law, improving our business vocabulary, and actually actively becoming an inside investor, someone that has a company and is investing to build our asset column, is devoting time into investing to acquire cash flowing assets. And we're working for passive income, not for earned income, okay? Earned income is the type of income that you get from a job, and that is taxed at the highest bracket. You have no room to deduct any taxes because the laws are not in the favor of employees, okay? And that is okay. If you love your job, you can continue working, but you can also start working on your passive income like we talked about on the video that we did yesterday. If you haven't watched it, make sure you hit the subscribe button so you can get notifications of the upcoming videos, and you can also look at our list of our past live broadcasts and other videos that we have recorded that will help you improve your financial education, okay? So there was a problem with all of these vehicles that the government is creating for people, and this happened in 1974. That's when the Retirement Act was passed for employees. Those are the 2 years that I want you to remember, 1971 and 1974. 1971, August 15, was when when President Nixon separated the gold from the dollar. 1974 was when the Congress passed the act for retirement that obligated basically uneducated employees to put money into a 401k, stocks, and other vehicles like bonds and mutual funds that were being sold by salespeople that are working for commissions. They're not working for passive income. So a good thing to ask from a person that you're getting advice, how do they make their money? Do they have active investments that produce cash flow? etc., or they are selling you something for a commission. Okay, I want you to take, by the end of this video, how to determine whether something is an asset or liability, and also the 8 new rules of money and how you can start building cash flow using the internet. Okay, so the coming collapse of the dollar. If we have read our new book, How to Build Cash Flow with the Internet, then we learn about the new rules of money. We know that while many people think of the dollar as money, but since Nixon moved the dollar from the gold standard, the dollar is no longer money. It is a currency. This is the reason we have had so many wild economic swings in the last 4 decades. The dollar is no longer an asset that can be considered safe haven for investors in times of uncertainty. Because it is a currency, it is affected by the wild swings of the market, just like any other asset class. In the last year alone, the dollar has swung from $1.51 versus the euro to its recent low against the euro of $1.23. Because the dollar is tradable currency, it is subject to huge gains and drops in value based on market whims. As such, it gains and loses value all the time. So that's why it's important to acquire assets, not cash, to save it. Okay, savers are losers, debtors are winners. And it's scrambling for safety. Okay, why would anyone consider the dollar safe when the Fed has been fighting deflation with inflation, pumping billions upon billions of dollars into the economy? These investors know that each time a new dollar is pumped into the economy, that is already bloated money supply, existing dollars are devalued, and the bubble gets closer and closer to popping. In other words, what we're trying to say here in this blog is that inflation is going to continue to rise because the dollar is losing its value. The more the government prints money and pump it into the economy, then it's more important to start acquiring assets in things that are actually going up in value. Okay, so the only answer we can think of is financial ignorance for those people that are losing in these times, okay, and getting poorer because they have a lack of financial literacy that hinders them from obtaining cash flow and assets with fake money, using the bank's money, so we can actually obtain a credit card, obtain other people's money, and invest because the bank is lending the savers money. They can't keep it either because the bank knows it's garbage. The bank understands that it has to go to work into an asset so it can be multiplied, so it can bring returns back in a form of passive income. So we need to understand how to use other people's money, OPM, and other people's time. U.S. deficit spending in 2001, the 2.77 trillion more than it collected. To the average person, this is insane. We know what happens when we spend more than we earn for years. Our creditors come knocking on our door, and people refuse to believe us when we say we will pay them back. Today, investors are saying they don't believe that U.S. can pay back their creditors. That is why they are ditching the dollar. U.S. foreign debt. As of January 2022, the United States owes China approximately $1.6 trillion. Japan has the top spot among foreign creditors, $1.3 trillion, which is 4.3% of the total U.S. debt. These numbers indicate that we are much more indebted to the rising global economic power of China that the layman may have previously thought. The U.S. is the biggest debtor nation in the world, and we are indebted most to a country that has expressed continued and stronger criticism of the dollar. If China decides to collect on its debt, the dollar will completely collapse. This is another reason why investors are ditching the dollar and why we're focusing on passive income that comes from cash flow and assets, whether it's an intangible or tangible asset. But we're not investing in cash. We're investing in assets, okay? When you work for time, you're investing to obtain a paycheck, which is cash, which is money that is not longer backed up by gold. You're working for fake money. Living on borrowed time. In the past, we have read about the types of depression, U.S.-style deflation and Germany-style hyperinflation. We believe for both types of depressions, if things continue as they are, that means the dollar may gain strength for a little while, but ultimately it's a toast. As the old saying goes, all currency eventually go to zero. In other words, it goes back to its natural value, which is zero. There's no currency in the history of the world that hasn't eventually crashed under the burdens of debt that is government printed, really. And, they're responsible for it, but we can use the new rules of money and the way the money is being printed into our advantage to acquire assets for free, basically. Once we understand financial education, we can obtain assets and we can get rich for free. If we're not doing it that way legally, then we're not doing it correctly and we don't have the right financial education. So hopefully this video has been very valuable to you, and I hope that you are watching us live right now. And if you're not, then thank you for watching the replay. Make sure you hit the subscribe button, give us a like, and you can go to MASTERINVESTOR.education and get this blog right here, okay? So what it saves? The short answer is cash flow and assets, like I've been saying, right? Cash flow and assets, the investment philosophy for us, we invest in assets that cash flow and hedge against any inflation. That's why I tell you it's not about predicting the market, but it's about being prepared for any type of market, okay? Like businesses, real estate, digital assets, technology, oil wells, gold, and more. Those are great assets to obtain for our asset column, okay? The fastest one are digital assets. You can start building cash flow with the internet quickly, and you don't need to have, a lot of investment, whether it's investment, debt, good debt into the asset. You can start with no money, and if it takes money to make money, then it's not correctly done. You don't need money to make money. We need knowledge, okay? So additionally, we keep our liquid investments in gold and silver instead of dollars. This is because gold and silver rise when the dollar falls. This has worked well for our company and our partners for the last decades. Our investing takes a high level of financial education. We'll have to decide for ourselves where we are financially, and we can then take massive action in building our asset column. How to determine if something is an asset is what makes the rich richer and the poor poor. What you can do, the rich do not invest in fake assets, and we do not work for money. Rather, we know the rules of the game, and we understand that money is debt. Our financial knowledge and intelligence allow us to invest in real assets that put money in our pocket each month and make us richer. How to determine something is an asset? The answer is being able to read financial statements is the key to financial freedom and can help anyone reach financial freedom, okay? If anyone working for earned income wants to get off the hamster wheel of giving their money away to the rich through fake assets and their time away, which is the most precious asset that we all have, is time, then they must first start with financial education. That's why we encourage you to invest on our book. Get the entire ebook for less than $50. Download it, and you're also will enter our inner circle so that you can have more financial education exclusively delivered to you because you are part of our community here at Master Investor. So we must increase our financial intelligence to invest in real assets that provide cash flow and understand the following: how to use taxes to acquire assets, how to use debt to acquire assets, how to reinvest gains without paying taxes, why it makes sense to save gold and silver, no fake money. By increasing the financial education and knowledge, we too will be able to invest like the ultra wealthy and easily spot fake assets when we see them and invest in real assets like a professional and inside investor, okay? Also, you can find our resources right here. Follow us on Instagram, listen to our podcast, subscribe to our newsletter, follow us on TikTok, purchase a business digital course right here on our all courses, and also like us on Facebook page and join our inner circle by buying our book. Just go to all courses. If you need a live consultation and you need to start building your asset column but you don't know where to start, buy the book. That's what I encourage you to do. If you need a live consultation after you read the book, then you can go here or do both simultaneously so you can get a head start, then we're glad to help you, okay? The presentation that I have for you today is right here. Let me find it. And I want to show you the 8 new rules of money so you can understand the whole blog that we just read in this video broadcast that we have going on right now. Thank you for watching us, and I appreciate the time that you're putting into listening to this valuable content. So the 8 new rules of money, okay? The new 8 rules of money, these new rules of money will further help anyone determine if something is a sound asset, therefore increase their cash flow, your passive income, right? Cash flow is AK passive income. Cash flow are the most important words in the business language. Every master investor, aka inside investor, will always want to know what's the cash flow. And a bank will want to know what's the cash flow, okay? So rule number 1, money is knowledge. That's why I said it does not take money to make money. It takes knowledge. Once we have the financial education, then we can actually make money with it. But we first need to get the right financial education. Rule number 2, learn how to use debt. Rule number 3, learn how to control cash flow. Rule number 4, prepare for any market. Rule number 3 is very important because once we learn how to use good debt, then we can use it as leverage to help us get to the million. And if you want to be billionaires, and we can get there fast, okay? Rule number 3, learn how to control cash flow, goes hand to hand with using debt, okay? A bank or investor is not going to lend us money if we don't learn how to control cash flow. We got to learn how to control the way the cash flow flows and keep the most. Once the cash flow comes in into our income column, we got to learn how to use our taxes into our advantage so that we can pay zero in taxes. We keep, it's not about how much money we make, it's about, at the end of everything, how much money we keep, okay? And we can use it to reinvest back into our asset column to acquire either more assets for our one asset that's making us a lot of money and we can improve it, or we can get a new asset that will make us more passive income, okay? So rule number 4, prepare for any market. We talked about it, right? It's important that we focus in being prepared for any type of economy, okay? And not just predicting that a crash is gonna come. We understand as inside investors that the market goes up and down. We talked about it on our previous live broadcast, that was very important, okay? So rule number 5, the need for speed. And there is a 5-step formula for the velocity of money, okay? And we can achieve that with understanding how to move and how to acquire assets that cash flow with debt, using leverage, right? Debt is leverage, good debt is leverage, and then use that to acquire the cash flow and asset that produces us passive income, right? At the end of the week, at the end of the day, or at the end of the month, constantly, okay? And then once that asset produces enough cash flow to recoup that debt back, then we can move into acquiring another asset, okay? There are 5 steps to it. We acquire a cash flow and asset. Number 2, get our money back so that we can get the money back for the bank. If we use the loan or credit card, get that money back. Number 3, keep control over the asset. Number 4, invest into another cash flowing asset. And number 5, repeat the process. That's the velocity of money right there. It's when we are able to get rich for free because we have no money invested into the asset that is producing us and is making us rich every single day, and also is allowing us to leverage that to acquire more assets. Rule number 6, learn the language of money. Like I said earlier, it's very key to expand our business language. There are about 500,000 words in the English dictionary. Part of that dictionary is devoted to the business and investing language. A doctor knows how to speak his own language. A lawyer knows how to speak his own language, etc. A businessman, aka a master investor, aka an inside investor, we also know the business language that determines our wealth. Remember, Knowledge is power, is the new money actually. Knowledge is the new money. Okay, with application, it becomes powerful because we can actually print money legally with knowledge and without using any money. So rule number 7, investing is a team sport. Choose it wisely. I always say this world of investing and getting rich cannot be done by yourself. Look at all the greatest investors out there. They have a team of people around them. So make sure that you get your lawyer, make sure that you get your mentor, make sure that you have your advisors, and not just people wanting to take money from you, but they're actually helping you achieve and fulfill the need that you're filling in the market with your business, because every business or investment is there to solve a problem in the marketplace. It's to provide a solution. Okay, so the investing game is a team sport. It's not something that we do individually. That's why I encourage you to join us on our inner circle at www.masterinvestor.money. Get the ebook and join us so that we can help you elevate the financial well-being, and also we can help our community, our friends, and our associates and get wealthy together. Rule number 8, learn to print our money legally. Okay, there's no reason to do anything illegally. We have the rules into our favor, the laws into our favor, and the new money is debt. So we can actually use fake money because it's debt. There's nothing backing it. Money's fake. It's an idea backed up by confidence. We just need a credit card and then learn how to manage that debt correctly and use it to buy and acquire an asset that produces cash flow. Okay, so what is an asset? Investment or a business that puts money on our pocket without working hard for it. In other words, a business or investment is a system of systems that do the selling and telling for us. What is a liability? Something that takes money out of our pocket, money out of our expense column. Okay, that's a liability. It requires us to pay, and it's not really putting anything in our pocket. What is good debt? It puts money into our pocket, income column, and someone else pays for that monthly payment with interest. Someone else, so if you have a mortgage, somebody, the tenant that you are getting from Airbnb is paying for that mortgage, plus is giving you enough to not only cut the grass, pay the taxes, and also leave you with positive cash flow at the end of the month or at the end of the week or every single day. Okay, what is bad debt? Takes money out of our pocket or income column, and we have to pay for it with our hard-earned money, with our own money. Okay, so that's how we determine. So an asset goes hand to hand with good debt, and a liability usually goes in with bad debt. Okay, so the rules of money change, and remember the 2 years that I told you, 1971 and 1974. Those years, the rules of money shifted. It forever changed the way the financial educated got richer, because money or dollars became a currency, not money. Such currency became debt and just an idea backed up by confidence. The Employees Retirement Act was passed in 1974 and obligated them to invest in fake assets. That they're fake because it's not putting money in their pocket, so it's a liability. Get our new cash flow ebook. I encourage you to get it. Always invest on your financial education and yourself. It's something that no one will ever take away from you. So that's the best investment we can do. And then you learn how to build cash flow with the internet. Turn passive income on is subtitle. And leave us a comment and let us know your review on the book. Get a live consultation. Want to learn how to start a company and need help as to where to start? You can visit our website at www.masterinvestor.education. Go to the digital course and schedule a live Zoom meeting with us so that we can help you get started right away. Okay, thank you. Phone numbers right there, 239-565-8555. You can give us a call. You can send us a text. We're also on WhatsApp. Bring you the good news and bad news of money, the business principles that work in all economy. I hope that this valuable content has shifted the way you think about how to make money and how to get rich. With that being said, I'll see you on the next live broadcast. Thank you for joining me today on this amazing live broadcast, and hit the subscribe button. Leave us a comment and let us know if you have any questions at all, and we can definitely help you. Visit our main website right here. If you have any other questions, we can also answer those for you, okay? Thank you for now, and I'll see you next time.